Hi, good morning. It's been a range-bound days for our markets around the 7,800 level. We have a couple of big triggers lined up, the winter session of the Parliament, the RBI and the Fed policies. Which do you think is the most important trigger for an investor to watch?
Well, I think from our perspective, what happens in the Parliament in the winter session, that will be probably far more important, because on the Fed rate hike, it is now just a question of when. I think how much is also almost kind of there in the consensus, which is 25 basis points. It'll happen sometime over the next 1 or 2 months, I guess. And I think the market is also looking at probably that being the rate hike, the only rate hike before the presidential elections. So I think from our market's point of view, it is what sort of legislation gets done in the Parliament. Because what we are grappling with in our market is now beyond the macro story. What is the translation of hope in terms of actual performance? And one of the performance parameters which the market will be looking at is what sort of reform measures go through, and to that extent, what sort of expectations and hopes that can be built up.
Okay, so the winter session, if the GST amendment bill doesn't go through, would it be game-changingly bad? If it goes through, would it be game-changingly good?
I think game-changingly neither way, but
Okay.
but definitely if it does not go through, it'll be a source of disappointment, especially amongst long-term investors.
Does 7,500 get taken?
That would anyway be at risk because if the earnings don't improve immediately, in the short term, I'm saying in the next 2-3 months, if the December quarter earnings don't come as good as what is being expected, because now remember that first 2 quarters, earnings have come in worse than expected. So there is a whole lot of burden which is there now on the December quarter as well as in the March quarter. Clearly the expectations have been coming down, but do they need to come down more? And that is what the immediate earnings season will determine. So if you don't have GST getting passed or other reforms getting through, then I think some little bit of dent in confidence will be there. I think on the positive side, clearly it'll be looked at positively, but there is also an expectation. It is a reform which has got fairly broad-based support. So once the politics of it is out of it, then probably it will go through. So it not going through will be probably more of a disappointment factor.
Okay, well, let's talk about some sectors and stocks now. The sector of the month, one of the sectors of the month has been the auto space, Ratnesh. One, because of the way the 7th Pay Commission will, put more money in the hands of government employees for spending. And 2, because genuinely this festive season has been good for many of the auto companies. Is there still more potential in names like M&M, Maruti, Bajaj, Hero?
So I think auto in general, if you're looking at, it's coming off a low base in terms of demand. So whatever that positive triggers which are there on demand will help auto. I think the more riskier play is more on the economy sensitive side in terms of commercial vehicles. Those are more linked to the economic recovery cycle, whereas the consumption side of auto, I think it's more steady, it's better placed, and I think that will continue to do steady. If I look at the market right now, we are not looking at massive home run kind of plays. What I'm looking to play is that yes, near term. News flow on earnings fundamentals are going to be weak in the next 2-3 months. So what are the sectors and what are the areas that I can play, which within that context have better growth or better potential for returns? So I think auto will be one of them. IT services will be another one of them, and banks also to some extent will be there because of being core segment of the market.
Okay, which kind of banks? You would still play only the private sector banks?
No, I think there was a long period of time, maybe 5 years or more, where there was excessive amount of concentration of attention and money on private sector bank. So clearly the public sector banks have a whole lot of issues long term to resolve. But what we've seen is greater balance of interest between private as well as public sector banks, and I think that is how the strategy should be going forward as well, because
so you would pick some of the public sector banks.
Yes, I think versus a clear-cut call earlier that it is only private sector banks, I think now there has to be a greater balance in the portfolio between public and private sector banks, because problems are there. Problems are also known, and there are some attempts at solutions, and the valuations are really cheap on the PSU bank side. So eventually that balance will be there. And even in terms of balance of flows into the banking sector, there will be greater flows into the PSU banks.
What about the cement space? There's a lot of hope now that once the capex cycle revives, cement will be a multi-year cycle on the upside. Is that your view as well?
If I was to play the capex cycle, or if I was to play the recovery cycle, then I think probably in terms of multi-year plays, I have better options in terms of capex construction equipment companies. Cement is more of an early cycle.
Construction equipment companies.
Construction and equipment.
And equipment, okay.
Companies, or you have power transmission companies. Those sort of companies which will, as and when the recovery in capex is there, they will be there for longer. Cement is an early play in terms of construction activity picking up. It will be more of a steady play rather than a multi-year sort of a
You aren't yet buying it.
Full cycle play. In the near term, it's a steady play. But I think what she asked about the capex cycle, long-term capex cycle, multi-year plays, that is where the equipment, the construction, the EPC players are probably better positioned to benefit from that.
Okay. Would you bet that this earnings season could be that growth-generating season where perhaps upgrades will be more than downgrades?
No, I would not. I don't think December quarter will be the quarter which will mark a turnaround in earnings. I think the best that we can hope for is that the downgrades stop.
Okay.
I don't think you have enough positive drivers or triggers that we can see on the ground which suggests that the December quarter will be so strong that it will mark a turnaround in earnings. It can, if it meets up to whatever the lowered expectations which are there for the market, I think that will be a good start.
Okay. In the last a couple of weeks, we've seen a lot of sectors that have given you trading pops, whether it's aviation, whether it's sugar, some of these textile names. Are these just that trading pops, or are there any investment ideas in these spaces?
So these smaller spaces in the market, they tend to be kind of driven by single factors, single drivers. So in aviation, you've had obviously a big listing which has happened, and obviously aviation is helped out by oil. So I would say these are sector-specific trends. They are rather small sectors of the market, and when there is not much momentum happening which is on the broader market, then these smaller segments tend to get into focus, but they're not relevant or too significant for the market overall.
Okay. What's the one-year call on the Nifty, Ratnesh? Or is it that Nifty is the wrong place to look for growth?
No, I mean, growth is going to be led, and the market is going to be led by larger companies. So be it the earnings recovery or whatever is a story that has to be led by the larger companies. And so, standing as I am today here, if I'm looking at 2016, while the early part of 2016 will not be or will be quite challenging, I'm hopeful that sometime in 2016 late, we should see a level of 9,500 on Nifty, simply because I'm expecting that the growth will come back, the earnings growth will be better than what it is today. And the valuations are middling now. Valuations are at or about average. And in the context of globally all the other markets which are available from the investor's point of view, India is still an attractive proposition. So while we may quibble about our challenges, that investment cycle is not turning, earnings are not there, bills are not getting passed, whatever. But in the context of the other markets globally, I think India is not a bad place to be. So I'm hopeful that we will see a level of 9,500 Nifty or beyond in 2016.
Okay, that's a great point to end this conversation, Ratnesh. 9,500 still, accessible in the year 2016. Well, that means growth is around the corner. Thank you very much indeed.
Thank you.
For joining us. So that's the word coming in from our market master, that green shoots quite clearly visible, but don't lay too much store by the third quarter itself. On markets, at this point in time, the Sensex has turned mildly in the green, but the mid-caps are showing more fight, as it were. It's about a third of a percent higher, no, quarter% higher on the mid-cap stocks itself. Two stocks that stand out, both penny stocks, but because of some repair work underway, Lanco Infra, Sonia has been speaking about